Good evening and welcome to the Trading the Tech Show. My name is Derek. Today is November 10th, 2020. This year is going by so fast, like it's already November. Wow. So just kind of forgetting where we are here in time. So we're looking at right now the aftermath of the rate announcement out of New Zealand. We talked about that this morning on the Daily Market Overview show, that to be aware that the rate statement was coming. We see that the rates were left here at a quarter basis point. So the rate didn't change. So what's most important and traders will be looking at is the actual policy statement itself. So the cash rate actually came out at about 10 p.m. our time, so just about an hour ago. So we've been getting reaction in the market to that across the New Zealand pair. So this is something that we have been watching as we go here. We're going to go through some of the pairs tonight, just kind of see where we are here. Let me go ahead and restore that really quickly. And just see what opportunities lie ahead. We had a really great day in the market. We were able to glean some pips. It was kind of rivaled yesterday, the way that we were able to get some. So, I think it was actually a good day. So this week so far has been very, very busy for us. Just kind of watching over the accounts, managing them a little bit, making sure that the pips come in, watching the auto traders and letting them work as well, and just trying to put pips in the bag. That's what we've been doing. So we've got a lot of opportunity here. So we're going to take a look now at what's currently here. Let me hide these controls really quickly. Oh, great. So the Aussie CAD right now is trading above the 720. So that has not changed. However, we did earlier today, earlier yesterday, dip down below the 200 moving average here. So we had the opportunity to buy on our 100 or our 50. And now you can see where that order would definitely have paid off for us at this point in time. Right now, we've got the full mature trend to the upside. And so we're just kind of seeing if this is going to play out into a bigger, wider, more extended trend. So we'll see how that particularly goes for the Aussie CAD. Now, as far as the Aussie yen, kind of the same thing. The rate is above our 720. So here's our 720 down here, our 200 sitting here. So we're in order to the upside. And we've got, we had this big move up, 2 days ago now, 2 trading days ago now, since we're in a new day, where we had this nice peak away from the movement away from the 50. And then we kind of came back and touched the 50. So now we're just cruising off to the right just a little bit. We're sitting right now about 76.59. We are waiting for any pullbacks past the 50 or past the 100 at this point in time. We've got a little bit of a ceiling going on, but in general, this is the trend, right? So as we improve price by pulling back past these moving averages, then we expect that our trend to continue on to the upside. No matter how hard it kind of pulls back on us, we expect that we would continue in the same direction. We're just improving price. Now, as far as the Aussie New Zealand, this is one of those trades that have been affected by the rate statement that we just got. You can see kind of the whipsaw that we got here. Traditionally, what I kind of see when a news report like that comes out, it typically trades really hard in the wrong direction and then corrects itself and goes in the right direction. That's typically what I see. It almost rarely ever just goes in one particular direction and just stays there. So that's what we kind of saw here in this Aussie New Zealand. We'll make it a little bit bigger here so that you can see it. We're trading definitely below our 720. So our orders should have been short based. So we definitely, as we pulled back past this 200 or this 100, a short on either one of those, or actually past the 50 or the 100, a short on those trades, on those moving averages would have actually yielded us a bunch of pips now. So, right now we're sitting down here right around 106.18 to 106.21 or so. And so we definitely could have gotten, 20 or 30 pips out of that type of a move. So it is good to trade in the direction of the trend. So, I mean, I've been seeing memes and things like that, and people talk about the trend like it isn't important, but the trend is absolutely important in trading. So, it's really weird that people just, I think they have just so much time to think about, and they're just trying to come up with so much, that they just feel like they have to, come up with something to say. But the trend is always our friend. We always trade with the trend. If, unless the strategy just calls for it to be contrarian, kind of like the diamond auto trader, we always want to trade along with our trend. And in times like this, it helps us because the spikes that we get typically are in the direction of trend, or will end up in the direction of trend. And so that's why that's important. Looking at this Aussie US, kind of, still the same thing here. We are trading well above our 720. We've got our full mature trend to the upside right now. The moving averages, the 21, the 8, the 50, and the 100 are all kind of in the same area. They're very, very close together. So we're going to need to get some separation going on here. We got a lot of consolidation just across, for the whole day, really, in the Aussie US. The whole day yesterday, and then starting today, we're still kind of within that range. Right now, we're about at the top of the range, sitting here at 72.89. But we need to see these moving averages start to kind of widen out, give us a little space there, so that we can really get this trend on the move. Other than that, we needed to pull back down here past the 100, past, maybe get close to this 200 before we drop an order, a buy order on maybe our 100 or our 50. Right now, though, I would kind of just chill and just let that one be as it is. Now, the CAD yen, if we're looking at this, we're well above our 720, aided by the move a couple of days ago, this huge move up that we saw. After so much kind of consolidation and smaller moves, we got a really, really huge move. This is great. We actually, it actually widened out our trend for us quite a bit. And now we're just dealing with the aftermath of that. So we kind of consolidated a little bit. I would almost call this like a consolidation, because we weren't really getting, we're just traveling as much high as we were low. So even though the trajectory is just a little bit angled up here, I still feel like basically that's a little bit of consolidation in the market. Just had a little bit of upside to it. And now we've actually broken that trend to the upside. Like if I draw a line here, you can see like we kind of had this trend like here, but we've actually even broken that at this point in time. So I really just feel like this is kind of just like some type of consolidation, and now we're finally breaking out of that. But we got down here, we traded down here at the 100, close to the 100. So we could have dropped our order to buy here on our 50. And right now we'd be looking at getting into that trade right now. The rate is getting very close to the 50, and where the 50 is at 87.44, 80.744. That would be kind of our entry point, and then we can move on from there. Then we allow the trend to do its thing. The rate should go in the direction of trend. That's pretty much what we expect. Now, as far as the Swiss yen here, we are trading above the 720. You'll notice that all the moving averages now, instead of this nice wide open trend that we had, they're trying to change trend on us here. So we're out of order as far as like the moving averages. They're not in order to the upside. We got some headed to the downside. The 200 and the 100 still are signaling upside. So what I would do here, since rate is above the 720, my buy order would go here on either my 50 or my 100 moving averages in this area here. My 50 is sitting at 115.07. That would be my buy point. Because we're still above, I do still respect the 720 as my gauge on direction. So until my rate really gets below that and really spend some time below that, then I'm really only interested in buy trades, and those are the levels I would place it at. Now, as far as the Euro Aussie, we are trading to the downside here. We have rate underneath our 720. All the moving averages are below the 720. So we've got full mature trend to the downside. All we're looking for is these pullbacks past the 50 and past the 100. So we're kind of getting those, and then it's been, giving us some shallow gains here, but that's okay. We'll take a few pips out of it, until, we'll see if this trend starts to open up a little bit. So right now, this is kind of consolidation, what I see here. What I see is, most of the activity happening between a couple of lines here. All this activity is happening between these two lines, right? So, there's really not up or down here at this point in time, but our penchant is to the downside. Our thought process is, hey, this is below our 720. The moving averages are in order to the downside. So the downside is the trend. So we would expect to take short trades here. We only want to short here. EuroCAD. We are trading below our 720, kind of like our Euro Aussie was. Only this one actually did pull back. It just was past the 100 for a little bit. We got past the 100 today already. So we've already broken the 100. So we could have had an order on the 100, or we could still actually place our order here on the 50 as a short. The 50 sits at 1.5390. So that's not a bad place. It's below the psychological level of 154 by about 10 pips. And it's pretty close to the 88, 153.88. And, we used to say that once you pass 88, you pretty much bought a ticket to the 50. So, we would expect that there would be some more downside once we hit that, past that 88 area. So we could still place an order here right now to short here on our 50 moving average in blue. Now, as far as the Euro Swiss, we've got still this trend to the upside. It's a mature trend to the upside. All the moving averages are in order from low to high. We're trading up here above, pretty much our 21. We did trade down here just for a little bit of time yesterday below the 50, but probably not enough for us to have caught this move back up. So we're going to wait and see if we get more of a pullback here. We're consolidating again here to, and this Euro Swiss. I feel like this is just trading off to the right now until it decides which direction it wants to go in. As far as the Euro Pound, we've got, sorry about that, I had to sneeze. Okay, let's see if my sneezes are over. Normally it comes in 3, so I had 2 sneezes already. So if I have to go away again, then that's the third one. But anyway, we are trading below the 720 now. And okay. Okay, I told you the third one was coming. So yeah, so we are trading below our 720. We've got full mature trend to the downside. And we've definitely got full trend to the downside. We're just waiting on pullbacks past our 50 or our 100 to get us, an improved price where we can jump in. We don't typically jump right in on a market order. We don't jump in on a market order right here. Now, as far as the Euro Yen goes, we are trading above the 720 right now. So all of the moving averages are above the 720, the rate's above. The rate did bounce down here below the 50 just a little bit, but it didn't stay very long. Just a couple of candles kind of below it. Spent some time below the 50, and now we're crossing back over the 50. So I'd probably wait right now and just see if this is going to get a little bit lower. If it drops below here and maybe kind of, test out this 100, then I drop my order on this 50 for a long trade. The yen really, kind of got crushed the other day. We saw these moves across the board on the yen, but now it's kind of like just giving us a reprieve, and now it's just settling in. Traders are trying to figure out, hey, what do we really want to do here? Because we had this big reactionary move to the markets on Monday, but now what do we really want to do? And they haven't quite decided that yet. As far as the Euro New Zealand, this one is still dealing with the aftermath of the rate announcement out of New Zealand. So, we see that we've got 3 red candles kind of going here. We did pull back here to the 100. So if we were watching that, we could have shorted here on our 50. It's a news event, so I don't hold it against you if you didn't, because nobody knows really what's going to happen during a news event. But trading in the direction of trend probably is a great idea if there's a lot of momentum. So we're going to have to wait now for this one. We do have full trend, mature trend to the downside on this Euro New Zealand. So we're going to just kind of wait until this kind of sets us up again for another, possible trend to the downside by pulling back to the 50 or the 100. Now, as far as our Euro US goes, we're trading above our 720 moving average here. Moving averages are not exactly in order here. So, they're kind of tripping all over each other right now in a very short and small space here right now. The only real option we might have had was to place our order on this 50 or this 100 back here, or maybe even this 200 back when the level was below the 200 and above the 720. We could have bought maybe on 200. We would have had a slight profit at this point. We had opportunities to profit slightly from that. But if these moving averages get ahead of steam and go the right way, it should actually produce some more pips for us on the way up. So we'll keep an eye on that. It's just kind of not ready yet, but we'll keep an eye on it and see what happens. As far as the pound Aussie right now, we are smack dab on the 720 right now. The rate is just kind of right there on the 720. The moving averages are all below the 720s. So since this really kind of is a pullback for me, I would have a short either here on the 50, on this 100, or this 200. That's where I would place my short. I'd probably be conservative with it, maybe place it on the 100 or 200. I'd lose these few pips from the 50, between the 50 and the 100, but I want to be sure that this is committing to the downside, and I want to see that movement to the downside and really kind of commit before I jump in. But there's nothing saying that you can't trade on this 50. Just be a little bit cautious. If it jumps back over the 720, then maybe you want to get out. Some of our automated traders are designed to do that, to actually get you out, if you cross over that 720, then that's our signal, like, okay, that's like our stop loss, because we know direction's different. Now, pound CAD, we're trading above our 720. So it's a little bit different than what we saw in the pound Aussie. We're trading well above our 720. We've got full trend to the upside, mature trend. Everything is in order. So we're just waiting on pullbacks here. We're going to wait on a pullbacks like the one that we got here yesterday, the pullback towards the 50 or whatever. Maybe here, because of the separation, we could probably go ahead and place our order to buy here on the 21. That would have been a smart move for us. But that's the only thing that exists right now for us. So we're going to have to wait, until this pulls back, past our 50 or our 100 before we go to take an order. Now, as far as the pound Swiss, kind of same deal, right? Same exact story. We're above our 720. We've got a mature trend, full trend to the upside. We're just waiting on a pullback at this point in time. We haven't quite gotten it yet. We haven't gotten any pullbacks really to this 50 since the market kind of took off and shot up to the upside. Really haven't had any pullback yet. So that will eventually occur, because obviously markets don't move in a straight line. So there will pull back and check themselves just a little bit, because, it's just a little bit hot right now. We've been benefiting from the moves in the pound, today, definitely. So, it's been a blessing ever since early this morning for us to actually, be taking orders on the pound and hitting targets with the pound. It's been great. As far as the pound yen, we are trading above our 720. Same story, full trend to the upside, mature trend. Everything is in order. We're just waiting on pullbacks. Pound US, we are trading above our 720. Same story here as well. We're waiting on a pullback. So there's not a whole lot of analysis that we're going to do right here. They're all pretty much doing the same kind of thing, right? All the pound trades are doing the same thing, just moseying to the upside. Now, our platinum auto trader, maybe the titanium, others will actually trade on that a little bit. It trades in a different place, so it's not going to be looking for that pullback necessary. The titanium looks for the pullback, I believe, but the platinum does not. The platinum is just like, okay, here's the trend. We should be continuing to trade in that trend under certain circumstances. So that's what it's looking to do. But the titanium is looking for a pullback, a deeper pullback. And when you get that deeper pullback, then it enters the trade in direction of trend. So the New Zealand CAD, of course, this is, beneficiary of the rate announcement that we just had. So we see this nice, movement to the upside. But, we talked about these moves. We got 1, 2, 3 candles right now that are pulling away from our 50. Look at the angle away from the 50. So we know that's going to exhaust at some point in time. So we may short, here. I'm not saying short directly here because, we're kind of having to pick the top here, but we might, once we start to see a red candle, we might figure like we might short that until it hits the 50, because we know that the angle away from the 50 was a little bit sporadic in the way, and just a little bit probably overplayed because of the rate announcement itself. So traders tend to get to overheat the market when that happens. And so, and it's going to retreat and kind of check itself at some time. So that's just a way to play that, as it kind of, the market's a little bit elastic. You pull it, you stretch it, but it's going to pull back to its original form a little bit. So that's the best way to kind of explain it. So we've kind of got that going on across the board with the New Zealand pairs. Here's the New Zealand Swiss, same thing, full trend to the upside. Full mature trend, everything is there. We got some width between the moving averages too. We've got that nice push at the end here because of the rate statement. And so we might play this one too for a pullback to the 50. That's really up to you. And, if you have the risk tolerance for that particular strategy. New Zealand yen, same thing, full trend to the upside. We've got, pulling away from the 50. We're just waiting either for pullbacks past the 50 and the 100, or we can play this to the downside once, the momentum kind of subsides and then it wants to kind of, do its elastic thing and kind of come back into shape. Then we can maybe short that, for a few pips. But just be mindful, just watch it, watch it and make sure you lock in what you have and then let it run. It's contrary to trend. So we have to be careful there that we don't, we're not going to look for 100 pips. Sometimes it might give us more than what we're looking for, but it might be like a 20 pip run. It might be a 10 or 15 pip run. It's just a way to put a few extra pips in your pocket if you're looking for some, typically off of some type of news event that can be done. So, I just trying to give you the overview. I'm not saying that I would do it myself. I have done it. When I see opportunities like that, I like to see pretty much those big pushes away from the 50. And then sometimes when that I feel like that's kind of exhausted, I start to see some red candles or red in the candles, then boom, I'm on it. I'm on it to like short it, because I feel like, okay, great. Or maybe to buy it, depends on which direction it went in. Because I feel like there's some pips I can get as it kind of snaps back to where it should be. New Zealand, US, same deal, right? So, no need to reiterate the same thing over and over. As far as the US dollar CAD here, we did get this kind of move. We're getting a move up today. Did trade past the 100, up here in the territory of the 200. We were getting close. So our short order would have been here on our 100 or on our 50 would have been our short. Here we went back again over the change of the day. We were here again up above the 100, trading towards the 200. And now we would have just surpassed both the 100 and the 50. And we most likely would be just a little bit profitable on those trades. It's dollars. So our expectation is what? Our expectation is that it will continue to trade to the downside. Even if it has little moments where it's going the opposite direction, our idea is going to trade to the downside. US dollar Swiss is kind of doing its own thing here. We've got moving averages that are jumping over our 720. Everything is over except for the 200, and the 200 is fast approaching. So we're going to see what happens here. The rate is above the 720. We're going to see what happens when if the rate pulls down here. Does it test our 720 again, or does it drop below the 50 and then resume its trend to the upside? We'll see what happens here, but this has got to develop for us. We've got to wait at least for a pullback now to this 50 or to this 100 so that we can drop orders on those moving averages as they are above our 720. As far as the US dollar yen, same kind of thing, right? We've actually kind of changed direction here. The moving averages are all over the 720 except for the 200, but the 200 is very, very close to our 720 right now. we've got the rate coming down. It's between the 50 and the 100. So our opportunity to buy might only really be on maybe this 21 right now. If it drops any further, the rate drops any further, then we can drop our order basically here on this 50, which currently resides at 105.135. So it may change by the time the rate drops down further and gives you room to place the order. It may change a little bit. So, don't take that number as the place where you have to get in. Just look at it when you're ready to get in and you see the setup, then you take the trade that makes sense at that point in time, because the moving average may change. And it doesn't have to be exact to the number. You can do it exact to the number, just depends on how, but you want to be really, really close to that 50. It's where you want to place the order to buy. So that's where we are tonight. I hope that you got some ideas for that. Even though the week has been very good for us, I know there's, some of the charts are not showing us a lot of pullbacks just yet, but rest assured they will occur. We will get pullbacks in the market that you can trade this week. We've got a couple already going on. You had to be kind of fast to get them so far, but it's definitely looking good so far. I mean, we're still making money on some of the auto traders. So if you're not on one of the auto traders or you want to try the other ones, you can. Our situation is just a little bit different. And the reason is because normally when you buy an EA, you only get that particular one. And so, you have to use it across every single pair that you have. So what I thought about here was like, okay, we could have, what if you can have different automated traders that run on different charts, all doing different things and maybe being more effective. Maybe one you find is more effective on a particular pair, like maybe the yen pairs, you feel like platinum's more effective. Okay, so you run the platinum on that, but then maybe on the Aussie pairs, you feel like titanium is more effective. So you run the titanium on that, on the Aussie pairs. So it really is up to you. You can mix and match. Once you buy a subscription to the service, we can set you up with whatever you like, but you actually could mix and match the auto traders. Right now, we have 4 different auto traders running that we put out. So you can literally have the different 4 auto traders on your account. Or if you have different types of accounts, you can actually add, for a retirement count, say maybe you want to run titanium or vibranium, I don't know, whatever you want to run. You can run a different one for the different scenarios that you have. We pretty much run on the 30-minute chart, but, and I don't really want to go down too much lower than that. You probably could run on a 15-minute chart. But I'm liking this 30-minute chart. There's something about it with my auto traders that it just works for me. So, it requires a little bit of patience, but it definitely works. So I recommend the 30-minute chart, but you could run this on a daily chart. You can run it on a 4-hour chart or whatever, or day chart if you want. So, however you want to run it, a 60-minute chart, you could do it there as well. So, that you have some flexibility with our auto traders, which is great. And you're not just stuck with one. So if you find that, okay, like during this particular market, time, the market doesn't seem to be responding well to diamond. So let's use platinum. When platinum doesn't seem like it's working very great, let's try titanium. You have options where typically you don't have options with other auto traders. So I think that's, one of the reasons why I think we're going to be different. And I think people will like our service because you can kind of tailor it to what you need, according to the different products. And you have the ability to use more than one product at a time, depending on, one per chart, but you can have multiple charts. If we've got 20, 24 pairs, we don't have to train the same strategy across every single pair. We can tailor the strategy towards, how a pair particularly trades. Right. So, and as we develop more, you'll have access to those. So thanks for hanging out with me. This is Derek with iLi Academy. I'm going to go ahead and get out of here and, get some rest and then get back right up early in the morning for our daily market overview show where we go over the fundamentals and we talk about what the news reports are and how that might affect the markets. All right. So I hope you enjoy that commentary as well as this. I hope you've gotten some good trade ideas if you have any questions or any concerns, definitely feel free to contact me. I'll be here. All right. Once again, I'm Derek with iLi Academy. Have a great night. Bye-bye.